Hello and welcome to CryptoWeeklies. In this video, we discuss S&P 500. None of the content financial advice right now. This is again a crypto-related channel. As you know, this is the homepage of my website, CryptoWeeklies.com. The bullish sentiment is back on the crypto-related asset class narratives. Over the last 7 days, most of the narratives are based on the term frequencies on social media outlets. Most of the narratives are largely bullish. Bitcoin again currently above 73k. You can see ETH at around $2,200, BTC at 73k. As a effect of this is that in the midst of a bear market year, typically 2022, 2018, now 2026, the accumulation zone as a composite risk of our based on our own use aggregated risk-based models such as logarithmic regression, as well as time weighted average price based deviation and other all-time high drawdown based models, the composite risk has now left the accumulation zone for both ETH and Bitcoin again, and they together hold somewhere close to 70 to 80% of the market cap, as evident by over here. This is the Bitcoin plus ETH dominance analysis over here. Bitcoin 59% of market share, ETH 11% of market share, together 70%. That is over 2/3 of the market is controlled by Bitcoin and ETH market share, that is. So both of them being in outside the accumulation zone boundary, it makes sense to identify what is happening in other asset classes or other sectors of the market. This is the broad-based analysis of stock market in the US S&P 500. The current valuation of S&P 500 and sticker SPY has come down, cooling quite a bit from that euphoria from late September 2025 to about February 2026. This is a regression-based model, and again, this is a linear regression-based model. This model tries to identify the overvaluation, undervaluation of the stock market using metrics such as how far is the price away from the fair value. Right now, the fair value is $473. The price of SPY is currently coming at around $680 or so. The risk level has from the last drawdown from March, late March 2026, has now come back to the 0.9 risk level. Typically, in this level, the asset class spends only a handful number of weeks to months. You can see from 0.9 to 1 risk level. That's where most of the euphoria again occurred first in March 2020. Now, after that 2020 peak, one could argue that this is the farthest S&P 500 has deviated from the fair value. Again, this is not proportional or time adjusted. This is just a rudimentary analysis of what the fair value of a stock market is. And if, let's say, we get into these recessionary territory, what could happen to the stock market? In that scenario, the drop could be from the current price of roughly speaking $700, could be a 50% correction to get to the bottom of the range. Again, that's where the 2020 levels or the 2020 drop kind of held this as support, as the recession in that time period was very short lived. But you can see in the longer winded recessions, so for example in 2008 to about 2010 2012, the stock market did spend a lot of time below this dotted green line. Where is the overvaluation territory? Again, we are very close to this overvaluation territory. We are not as overvalued as we were back in September, so from April 1999 till about September 2000. The overvaluation territory ceiling for S&P is at around $723. So if the price were to go to that level, it would likely meet a significant level of resistance, unless it spends some time coming down, maybe not to the fair value, maybe like it did in April 2025, coming close to that $500 level. Maybe this time around $600 could be a significant high higher low at from that perspective. Nonetheless, these kind of models help identify the overall risk level of the asset in the asset class. Again, right now, if the price action were to go to a neutral territory, the starting point for that neutral territory is somewhere close to that 0.5 risk. Looking forward, it's close to $600. The current price of S&P 500 and its ticker SPY is $684. The 50-week simple moving average is at around $653. If we go and try to analyze this any further, right now the price action has broken out in the short term from that 20-week simple moving average, which typically holds some sort of a resistance in the bearish phases of the asset or the market cycle. This again, the first week since about or late February 2026. This is the first week where the price action is above the 20-week simple moving average. Let's see if this level holds at support. If it doesn't, the secondary level of support is this 50-week simple moving average, which is at $653. The longer term moving averages to help track the relative valuation of S&P 500 are some of the best indicators, such as the 200 week and the 300 week simple moving average. And those levels are coming in at around the 200 week simple moving average is at around $510. The last time price action came close to the 200 week simple moving average and held it at support was the bearish year of 2022, where the asset class or the wider markets essentially spent the entire year going down from Jan 2022 till about October, November 2022. So that kind of bearishness could get the price action close to that 200 week simple moving average. In the 2020 crash, the price held support at the 300 week simple moving average, which again at that point coincided with that regression based one standard deviation bottom as well. Right now, the 300 week simple moving average is at around $470. So that could be, again, if we are looking for a worst case scenario, somewhere between $500 and $470 as of today. But again, these averages are growing functions. So what is $500 today? As the price action spends a lot of time in these territory, let's assume this angle of incident stays constant towards the end of the year. 200 week simple moving average could be at around $570, whereas the 300 week simple moving average, this green line over here, let's keep it consistent coloring, could be closer to the $510. So again, now at that point where the 200 week is 300 week simple moving average could take about a year to catch up to that level. So in that scenario, if the support in this downturn, if there is a downturn, like typically there is a downturn in let's say in 2022 there was a downturn. In 2018 towards the end of the year there was a downturn from October 2018 till about December 2018, and again held support slightly above the 200 week simple moving average. Again, you would also find a similar story in 2012 as well. So if this year is the remainder of this year is bearish, then the support levels could be somewhere close to that $550 to $510, depending on when the eventual drop occurs in the stock market. If we are going to look towards the stock market in terms of, again, not financial advice, in terms of the time series forecasting based level. So this is MSTR, the stock market S&P 500 data since 1993 points to, if let's say we are extrapolating what could be a bear case, bull case in the next 6 months using the past data as a guideline. The bull case for S&P for this year towards the end of the year is as high as about $820. A non-panic bear case is close to $630. If there is some sort of a panic in the market, typically towards a recessionary trend, if that trend kind of manifests, then the next 6 months the support for S&P is close to $550. As mentioned previously, this area is confluent with the 300 week simple moving average, so extension of the 200 week simple moving average. if there is a panic case scenario for 2026. With that, again, all of these models are available on CryptoWeeklies.com. You can check it out. The link on the bottom of your screen. This is my website. There are other indicators on the website, such as crypto-specific social sentiment analysis, narratives, as mentioned previously, what narratives are kind of spiking at this point. How is the crypto asset class attention, overall sentiment, risk, and also what are some of the great cryptos in terms of their annualized returns and annualized volatility since 2021. These kind of analytics are available. Also, one of the more important ones is the overall health of the market using the ETH BTC risk triad that I'd like to call, based on top detector. This is detecting topping patterns in the crypto market. The bottom detector, again, this has not flashed a buy zone since February 2026. That was one of the bottoming territory. Again, something similar in late 2022 as well. The bottoming territory kind of manifested early on in June 2022. Based on the trailing z-score, the overall top versus bottom predictor in the last stage of the bear market, all of these indications using this is Bitcoin price superimposed with, let's say, Bitcoin risk over here. You would find that, again, a leading indicator of these bottoms usually occurs early on in the bear market. That has already triggered for Bitcoin, as well as even for ETH for that matter. If we go by ETH price and ETH risk over here, some sort of a low, not as much of a panic bottom as it was in April 2025, but so similar to August 2024 to September 2024 at that point. So these kind of analysis are all available on CryptoWeeklies.com. Link on the bottom of your screen. You can also check out the heat map to identify the overall status of the crypto market, to identify which cryptos are kind of holding the asset class together. Right now it's TRX, which is Tron's crypto. We did cover Tron extensively over the last 2 to 3 days ago. You can check out all of the YouTube videos posted by this channel using this website, and a shortcut from here. You can check, we did cover Tron a couple of days ago. Yesterday we deep dived into Ethereum, then Bitcoin. Thousands of videos over here to mostly related to crypto, some related to ETFs. So hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.